So essentially, the way that the United States raises money, a lot of times we're selling bonds. We're having bond auctions, and the people who show up at those bond auctions oftentimes are foreign countries who want to use our currency as a reserve for them. You know, you have U.S. dollars in your bank. Historically speaking, that has been a safe bet, but that is increasingly changing.
Was that
Um,
because of manufacturing? Because because you spoke about after World War II, that's when we began selling TVs, home equipment, home appliances. Like that's what really began, like began the boom, like economically. And I might be ignorant on this. Was the
I think war
manufacturing
bonds, war bonds
war bonds was
were more so a factor, right?
Agree. War bonds.
more okay, okay.
And that's how the stock market really. The World War One, when they sold war bonds, was the first time that the American public really had an opportunity to really invest into the market. And that's when investing got big. Was World War One with war bonds, which is why you had the raging 20s, right? And then people got
Hmm.
more into stocks. And then after World War II, you have the same thing. You have a lot of the debt raised for war bonds. Despite what a lot of people think, if I'm not mistaken, well, I don't want to make that statement, but the citizens of this country actually own a significant amount of the debt of this country. For a lot of the debt is actually citizens buying bonds as well. But that's how
Yeah.
we ultimately borrow money from other countries. Is we sell them a bond, and what is a bond? Bond basically has a interest rate and a maturation date. So basically, 5% for 10 years, or 7% for 20 years, something like that. Is at the end of this maturity, you will, until you're going to pay me back the principal and you're going to pay me back this interest.
It's a bond.
over
Word is
time.
bond. Facts for gentlemen. Give me $100. I promise I'm gonna pay you back X amount over X amount of time. That's all it is.